Yes. Hello? Hello? Ah, hello? Oh, yes, yes. Come through, come through. Welcome for Sunday, Mhlaka 14. So, okay, welcome, welcome, welcome. All right. Okay, admits. Let's just wait for more people to join in. Let's just wait for more people to join in. Well, today's session is going to be very not so long. I'm just going to have a very short session, and also we're going to do a little bit of few stuff regarding financial and portfolio management, and then we're going to go through doing a little bit of introduction about forex and risk management, and then we'll do this week analysis. Okay. How are you, Minenhle and Mr. Mien? How are you guys doing tonight?
Yeah.
Yeah. Okay, let me just mute. Let me just mute. Okay, let me just have a minute. Okay. Oh, okay. Perfect. Perfect. Okay. All good. All good. All good. Okay. You know what? Let me just go through the session because a lot of people will join us as we move along. It's okay. It's okay. It's okay. It's okay. So just as a start, because I don't want us to jump in straight into session, straight into analysis. I want to share something. So just a little bit on how you can just create yourself like systems in place regarding your trading account. Okay. So let me just sort this out. Just share and then it's PowerPoint. Okay, let's share. Let's go. Okay, 2 words in the room. Just add. Okay, perfect. All right. So basically, obviously, as you guys know, the company is Millionaires Intelligence Institute. So understand that what we're doing today is for training purposes, it's for educational purposes. It cannot be taken as financial advice. Okay, that is very important. That disclaimer is very important because then I don't want to be in trouble. That hey, now you're going to the bank, you're taking the loan because somebody says so in the Zoom session. Okay, but otherwise, let's go. So yeah, okay. All right. Yeah. Okay. So what I wanted to talk about is just firstly was just think about let's say you're owning, for example, imagine coming to a gold mine machine with coming on board. Okay, that's good. All right, welcome everyone who's coming through. So imagine coming to a gold mine with one machine. Every time you extract gold, you put it away into a reserve. Okay, a week goes by and you repeat the process until until your reserve have enough money to buy a second machine. Okay, which you can use to come to the same mine to extract gold at the same time as the first one. You now have two machines operating at the same time, allowing you to extract more gold quicker and allowing you to build your reserve quicker. Okay, you then use your reserves to buy a third machine, and then a fourth, and then a fifth. Okay, you now have about 5 machines operating at full capacity, allowing you to extract gold, and that gold is basically you're extracting your gold quicker to live the rest of your life profitable and build bigger reserves. Okay, that's basically just a bit of a explaining a story.
Joel's in a better mood now. Well, I guess he didn't like being dirty. That might be what's bothering Joel. Maybe he's grumpy.
You're just gonna mute everyone. Okay, let's go. Okay, so now think about this. You've got about you've got a very big, you've discovered gold, working with one machine, and now you've decided, okay, fine, but let me use the first machine to build more reserves. So now you're gonna be building, you have one machine, you use this machine to build reserves, meaning basically building up your profits and your money. You use the profits from the first machine, and the profit from the first machine, obviously use that to buy a second machine. Then when you have 2 machines, now you're basically building much bigger profits much faster. Now you can use the profits from those 2 machines to buy a third machine. In a nutshell, I just want to describe the process of actually that you can do as a trader. What you can do as a trader, if you want to build, let's say you want to build a very good portfolio, what you can do at the beginning, let's say you've got one trading account. What you can do now, let's say you've got let's just say $100 account. First, that's how much you can afford to fund your account. Firstly, you've got $100 account. Now, what you can do is sign up. Let's say you sign up, even if it's one broker, you create 3 to 5 trading accounts, either with the different brokers or one broker. And then you fund that one trading account, let's say $100 on that first trading account. When you make a profit, let's say your profit is about $50 or $100, you use the $100 to fund the second trading account. Now you've got about 2 trading accounts that you're trading with. Okay, so now you allocate funds to one trading account. You follow our channel's signals and our channel analysis. You make profits on your first account, and then you use your profits to fund account number 2. Okay, you withdraw profits from account number 1 to fund account number 2. Now you've got 2 accounts that you can trade. The reason for that is because you want to minimize the risk, and also you want to spread your profits, and you want to make sure you're making profits on 2 trading accounts. Because now, let's say you've got $100 in the first account and $100 on the second account. When you're making profits, you're now making profits on 2 trading accounts. Okay, what is that important? Is because it's important because maybe one trading account, you are taking signals that are based on the dollar pairs. Maybe on the other account, you're taking signal based on the pound and also on the euro. Okay, because you want to minimize the risk, you also want to make sure you maximize on your profits. Okay, so basically you repeat the process until you've got about 3 trading accounts, and then you're making profits from all these accounts. Maybe one account you're trading the dollar, second account you're trading the pound and the euro, and then the third account obviously you're trading indices. Okay, so that's how you can split your risk, and also you can basically create a way of you actually making a portfolio. Another thing, obviously, you can use some of your profits to invest and then buy assets, buy a retirement fund, buy property, buy automated software, of which obviously one of the trading account is on that software is creating you an extra income. Okay, that's something I always recommend that you do. So basically, the key thing obviously is that there are things that you can do that gonna keep you active on the market, whereby you're actually trading yourself, but also you can also have automation software that is giving you like an income on the side besides you active trading on the market. Okay. So remember, if you've got any question, you can feel free to ask on the chat box if you're lost somewhere. If you are a beginner and you are on this session, please do write on the chat box that I'm a beginner so that I know that you are a beginner. Because if you are here also, if you still because what is important in trading obviously is understand trends, is also understand candlesticks patterns, is also understand support and resistance, and also understand supply and demand. Okay, remember this session is recorded and it will be uploaded on your YouTube channel, and I'll share the link with you, with everyone on the who's on the group. Okay, like someone is coming through. Okay. Okay, so you must understand trend. What is important, I know a lot of people, we understand forex, but I just want to take you through something that I feel, even though you've been trading for a while, it's something sometimes some traders, they do forget to basically focus on. Okay, I'm just gonna take you through the things like the beginners session. A lot of people, it's just on the basic side, just building foundation for what we're going to be talking about today, because obviously we're going to be doing analysis later on. So understand what is forex. Forex is a $1 trillion market. Okay, the way we make money out of the exchange rates fluctuating, meaning the exchange rate is changing whether we are trading the dollar or the pound or whatever. So forex stands for a foreign exchange. It's the largest market in the world, with over $7.2 trillion traded in a day. This is the amount of money that is available on the market for you to trade. The reason, if you are trading, you are analyzing, you have to make sure you put in you focus on what you're doing. Sometimes I see a lot of people like they know what they should be doing, but not doing it. They're not really active. Okay, that's why it's important for you to go over all the videos that you have to go through. Obviously, even the ebooks that we show in the group, is because you are basically having a share on $7.2 trillion traded a day. Even if in your account you're making $10, $50 is good enough in the beginning. But as you grow, you must always monitor your progress. Are you growing, or are you in the same place as you were last month, or are you basically moving backwards? When I say moving backwards, I mean it's because you are not improving, but it's very important. Even if you're not improving, you need to monitor what is my challenge, where do I need to work on, what do I need to improve on every space of time. So that's very important. Okay, and then understand also these two things. Obviously, the stock market and the forex market. The stock market is where people are buying and selling off the stock market, where basically people are buying shares of different companies. So in the stock market is where you're buying shares of different companies, but in the forex market, we are basically trading currencies. In the stock market, companies are raising funds so they can develop new products and develop new services and open up new branches. All of that. It's like basically saying Tesla is developing a new model of a new car, or saying maybe was this Uber is developing airspace where people are going to be basically requesting airplanes or airline or Airbus, or it's like Coca-Cola developing a new soda drink or whatever, something new products open up new markets. That's basically the key thing that's happening in the stock market. Obviously, there you go, there's an investor, you buy a share in the company, but then in the forex market, you're buying a currency. So basically, you're buying a share within the economy of a country. Okay, and it's important to note that in the forex market, there's a lot of money invested in the forex market, because in the stock markets, we're talking about $200 billion traded a day. That is like in the New York Stock Exchange. But you're looking at the Forex market is $7.2 trillion traded in a day. What you want to do is you want to grab your share in that, whether it's $50, it's $100, it's $200, $1,000, $10,000. Doesn't really matter. It just depends in your skill level and your knowledge level, that the amount of money that you can make out of the Forex market. It's also important that to note that another important thing is your entry. When you enter in the market, it's very important also to know when you're gonna exit. When I say exit, I mean your entry, your buy, also where you're gonna close, where you're gonna take your profits. Okay, so just examples. Obviously, a lot of people know this. A simple answer to understand what is trading in the market: we are trading currencies. Currencies meaning money of different countries. Okay, these are the currencies that we're trading: your euro, your pound, AUD, NZD. It's very important that to note the reason we analyze the pound and the euro in the morning. A lot of people have seen that we analyze the euro and the pound in the morning is because a lot of times in the morning it's what we call London session or European sessions, where you're gonna see a lot of movement in the euro USD, and you're gonna see a lot of of movement obviously in the euro session, and that's going to be the pound, whether it's GDP, USD, GDP, JPY. Those are some of the currency pairs that we're trading mostly in the morning. And then in the evening, we're basically trading the US market. More like you're going to see movement in the Canadian dollar, also in the USD pairs. And obviously during the day, we're obviously going to be trading, even the Asian session, which is about 2 a.m. in the morning. You more likely see me analyzing NZD, AUD, and JPY, Japanese yen. Okay, so those are the currencies that are mainly moving a lot in the during the session of Asia. But what is important is that we basically are able to trade all the sessions. But I've noticed that there's not much movement when you're trading the Asian session. Asian session, you will note that it doesn't really move that much in the market. Okay, it doesn't really move that much. You don't get a lot of pips. Pips basically are points. It's just a change. It's almost like distance. If you're measuring, if you're traveling, you say you're going to be traveling 10 kilometers. That's basically almost in the same thing in currencies. The change in price is measured in pips. So that distance of the change in price, we measure in pips, same way as you measure distance if you're traveling in kilometers. I hope that makes sense, but it makes sense more when we go and look at the MT4, okay? We're gonna do some analysis. Obviously, the market is 24 hours. Please make sure, guys, if you are trading, allocate time to make sure you analyze. Allocate time in between. As much as you are busy, make sure you spend at least 45 minutes in your day or 1 hour analyzing the market, understanding what is happening, and also check what was the cause of that move or that certain move. Why did the price react in this way at this time? If you understand what moves the market, you will understand why is the price ready. So with this thing, it's a 24-hour market. You can trade 5 days a week, but it's important is this means you can trade anytime during the day. Customize your trading time according to the time that is suitable to you, okay? Which means you cannot say you do not have the time, because you just need to allocate time in between. Allocate time in between. Don't give yourself an excuse that you do not have time, that you are busy. Allocate 45 minutes, an hour, 2 hours. You've got 24 hours in a day. Just allocate 45 minutes, 1 hour, 2 hours, just analyze. If not analyzing, go over the videos, go over the ebooks. Then you basically have a bit of understanding of what is happening in the market every day. I've seen people that say, no, I know everything. No, in the Forex market, you will learn something. Even the same setup that you know, you'll see something different about it. But otherwise, obviously for the new guys here, when you say we're taking long or shorts, it means we're basically long is where we are buying, and shorts basically means we are selling, just a language that we use in trading. Okay, just to make sure everyone is on the same space, we're gonna be looking at the charts. Okay, looking at the charts. In the charts, we're just gonna talk few things for beginners and also for the guys that are advanced that are here on the session. Okay, It's important to note when you say market watch, our markets, we are trading currencies, okay? I saw that the question that I think I got there was, are we trading Forex? We trade in CFD, right? Yes, we trade in CFD because you're not actually holding the currency. It's just contract for difference. It's just us. We're saying we are buying and we're selling. We're not actually holding the currency, just like, you know, your banks or reserve bank. We're not doing that. We're just trading CFDs, okay? That is very important to understand. It's almost like you're not gonna, if you're buying a share of a company, you're not actually holding a share, but you're holding a share according to the contract that is there online. You don't have like a share certificate, okay? Okay, you're not gonna sit in the boardroom just because you bought shares online of Tesla. You're not gonna sit in the boardroom now and say, guys, no, please don't buy sweets because I think it's not a good idea. You understand? You're simple there to buy shares online because basically you want to make some profits if a share price goes up, and also because maybe you're looking at the dividends. Okay, when you say market watch, when you say you are watching the market, it means you are watching these currencies. Okay, remember there are so many currencies that are out there online, but the most important thing is we focus on those currencies that are gonna give us some movements. We want to see this change. When I say change, I mean the price to go there from that level to that level. It means there was a change in the price. Okay, for example, for the price to go from this level to that level over there was a change in the price. That change is how we make money as traders. If the price goes up, we should be making money. If the price goes down, we should be making money. How do we, if the price goes up, we should be buying for us to make money. If the price get to this level and start going down like this level here, we should be making money by selling the currency. Okay, in this case, what you have here is a USD versus CAD. It's M15. M15 meaning obviously looking at the 15 minutes charts, meaning every candle here was formed after 15 minutes. Okay, and then if the price is going up like this here, we should be looking to buy. If you buy and the price actually goes up, we make profits. If the price, like this case here, it comes from there and it dropped, we should be making profits if we are selling. So it doesn't really matter whether the price is dropping or the price is going up. As a trader, you could be making profits by the price going down or by the price going up, okay? Because you understand the market. What is important, obviously, is when you're trading, have a strategy, have a plan, understand that if you analyze, and your analysis was saying buy because you see that like you're saying the price is going to go up, but it doesn't go up. What you need to be able to understand is that you are not the one responsible for moving the market. The market is moved by bankers, is moved by investment bankers, is moved by the central banks. It's you're not your main thing as a trader is that you need to learn how to react to what the market is giving you. Okay, if the market is pushing up, your thing is follow the money, follow what the market is doing, looking to buy. If the market is dropping, looking to selling. Okay, that's your focus. Don't be like, now your analysis needs to be right because I said the market is gonna go down, you should be selling. If the market is going opposite your analysis, it's important to note it's not about you being right. It's just about you being in line with what the market is doing. Okay, it's not about you being right. It's about you being in line with what the market is doing. Even if your analysis is wrong, you can make money because your analysis said it's a good buy, not a good buy, but it's a good buy. That's what I mean. Okay, the analysis is like it's a good place for you to buy, but the thing is the price actually went down. What you should be doing obviously is selling, okay, because the market is dropping. Okay, so these are things we're trading. So these are currencies, euro CAD. As you can see, we don't write the whole name, we just write USD abbreviation of these currencies, USD JPY, GBP, USD, Euro, GBP. So these are currencies that we trade. And obviously we also trade gold. This is gold. Okay, let's just go over and do some quick analysis. It's important also when you are trading, when you do analysis, Another thing that you can do, I've spoken about this before, it's very important to understand market structure. Okay, market structure is that when the market moves, it doesn't just go up for no reason. When it goes up, it will retest. Okay, the market doesn't go up like this, just go up, you know, or it just drop like this. What happens at the market, the way it moves, okay, okay, like if there's such like aggressive move like this one over here, understand that the market will come back here, okay, and retest those points. So aggressive move, another aggressive move, drop, okay. Remember, like I said, if the market is dropping, what you do, you sell, you go short, okay. This year, the market was doing the compression. Obviously, this is the bankers taking profits from those stocks. So here, there was a huge drop, meaning the bankers were basically buying the dollar and they were selling gold. Then there was huge drop. Okay, what was the time? July. Okay, and then there was a drop in gold, and then here bankers are taking profits from those gold trades that were selling off, and then there was this movement over here, retracement, then another drop. Okay, one, two, and another drop, and from here again, then you saw that reversal from there. Okay, it started reversing, coming back to the same place. Okay, we've done analysis on this whereby see that. So now what I'm going to do is something we call a top-down analysis. Top-down analysis means you are analyzing from higher time frame to a lower time frame. Okay, higher time frame, it means it's almost like when you say talk about time frame. For example, here, if you zoom in, you can see there's here. Okay, a lot of people are still joining in. Okay, as you can see on this side, there's like M1. Okay, M1. This means you're looking. A lot of people that are scalpers. Scalpers is someone who open a trade in a few minutes, they close in a few minutes, or they're looking for smaller changes in pips. Okay, this is M5. So this is basically the change in the price looking at the smaller time frame. My time frame is almost like it's like you looking at the change in price within 5 minutes. As you can see here, this side of the charts, you see the dates. Okay, these are the dates and the time. So M5 is just saying every candle that you see here was formed in 5 minutes. Okay, 5 minutes, it doesn't give you much about the history of the price. But if you go to M15, you can see a bigger picture. You can see 3 days. You can see on the 12th, 11th, and the 10th. You see those 3 days. You look at M15. But if you zoom out now, you can see H1. You can see from the 12th of August up to the 29th of August. Okay. Yeah, scalper is me. Yeah. So basically, a scalper, what they do is they trade. They basically target small profits, not small profits. They want to open trades and close them now. They want to basically, they don't like holding trade for longer period of time. It's like if you're a day trader, you are open and close your trade in a day. If you're a scalper, you open your trade and close in a few minutes, not just a few minutes, but you want to look at the smaller movement, then you close. If you're a swing trader, more likely you open your trades, you close them, and like sometimes in 3 days, in a week's time or a month time. That's what you do as a swing trader. A lot of swing traders, obviously, okay. A lot of swing traders, what they do, obviously, is the swing trader. This is what happens if you're swing trader. Let's say you're looking at the H4. This is H4 for gold, okay? Your analysis are telling you now, this is gold, okay? I'm telling you that gold, your target is for gold to go there. And as you can see, I'm telling you that gold is gonna get to that level. I think you've done analysis on this like a long time ago, okay? I think when the price was here on the 21st of July, and the price was here, we said our target on gold is obviously this level over here, and it's already there. It's 1805. If you calculate pips from that level to that level, it's over 7,000 pips. Okay, so now 7,000 pips can mean $7,000 for someone. It can also mean $700. It can also mean $70. It can also mean obviously 70,000 rand, 7,000 rand, 700,000 rand, about close to a million or 7 million. It depends what is your account size. Okay, but for a scalper, there's someone in between here, in between the price, the swing trader will hold and make from there to there over 700 pips. But if you're a scalper, obviously maybe the scalper will do this. Okay, when the price is here, what they will do is when the price is here, they will just sell. When the price is down there, what they will do is they will buy. Not just a scalper only, also intraday traders or day traders. When the price is here, they will buy. When the price is there, they will sell again. When the price is there, they will sell again. When the price is here, they will buy again. Because a strategy of a scalper and a strategy of a swing trader are not the same. Not just a strategy, but their trading plan. It's like I want to buy here and close there and start selling here at that level because I'm a swing trader. Okay, because I swing and I hold my trade for weeks or days, for more than 3 days. Okay, now we're just gonna do a quick analysis on a few pairs. Okay, because we've got the guys that are trading. Okay, so H4, and then you've got your daily. Okay, let me just do that. That. So you've done analysis. This is what? This is a daily, okay? Analysis on this obviously was like when the price gets here, it's gonna do a drop, okay? So what normally the price will do is when it comes to a certain level like this, so because as you guys can see here, the market break a structure and then came back, retest, and then another drop, okay? So when that happens, obviously what do you expect? You should be expecting obviously further selling because structural broken. Let's go zoom in a bit. Okay. Okay. We're gonna be finished very soon. So analysis. Okay. So as you can see, the price, what is the price doing? It's moving in what? In compression now. Okay? It's moving in compression, meaning the momentum is no longer that strong. Expectation on this one is that the price will come here and then obviously do this, and then move over there, and the price will basically drop. Key level could be this level over here. So that level, expecting that level to be tested. Okay. Okay. I hope everyone can see what I'm doing here. Is it making sense? So this level over here is basically, as you guys can see, that over there was like, let's say where resistance. We just put R. Okay. And then the R stand for resistance. And then over there, just put S. S. Just put S. S stand for support. Okay. Okay. The S there stand for support. So expecting the price to go over that support and then drop to this level over here. Okay. Quotation on the USDJPY. Okay. Let's go down. Another one. This is I knew it. All right. Okay, so now we've got what is here, the pound. So the pound rested. I think we did share the signal of this. This was a buy limit signal. And obviously the retest on the pound is there. Expecting the pound obviously to go there and retest that level over there. Those are the expectation on the pound. But remember, as you guys, you should always check what made the pound, what made that drop. I think if you can see there, from where that level, you can see, I think we've done analysis on this and the pound. A lot of people caught this move. See, pound came back, and then it drop and obviously come back again to that level over there. As you can see, the pound was holding, kept on holding this thing here, compression on the higher time frame, kept holding. Suddenly there was this huge movement. This was after the pound. No, this was the dollar news, and then the pound. This was the what do you call this, inflation on the dollar that we released here, and then the pound was just obviously the pound. That drop on the pound when the interest rate doesn't when we release, I think those were like fake move, and then this one's a real move, and I see pound obviously moving up even more. Okay, so section of the pound will go over there, and let's just zoom in and let's just do a higher time frame. Expect the pound. Just remove everything here. Okay, that my expectation is that this is retesting that level over there. As you guys can see, that over there, it's like a retest. Get that, and you can see there. So especially, I'm expecting the pound to go over that level over there. First, that level, which is like your FCR, but the main level obviously is that level over there. Because the pound should go in that level, because these things over here, they are like resistance. So obviously when I say resistance, a lot of people they've got a lot of stop losses here, a lot of people that are selling, a lot of money stuck here. Also with that bullish candle, also retesting here, you can see that the price should be moving up like that on the, this is a pound, this is a pound. Okay, so what I mean is this is resistance. Okay. So that's just resistance here, and that's also resistance over there, and also resistance over there. So 1, 2, 3. So and then that is just FTR. So the price should be moving. Obviously, the first test it will be that level before the price go over. Those are just my view. Remember, I'm a trader, not the banker. I'm a trader, I'm not the banker. Okay. So yeah, that's very important to note. Okay. I think also the analysis on the Euro GDP was also spot on. I think a lot of people that are holding this are still making some money on it. And I think we saw a lot of huge movement on this thing, on the Euro pairs. A lot of them were dropping. So expecting this, because as you can see, as the market is approaching, it's important to note, how is the market approaching supply? Is it approaching with a compression or is quick? As you can see, this is our supply, our sell zone. The market was approaching with the compression, now it's dropping. This drop should go over there. Okay, because next level will support that level over there. Okay. So yeah, I think I'll upload this on YouTube. If you guys can see USDJPY, USD Euro GBP, and also you can check out, I think you've done gold, indices like NASDAQ. I think I'll share analysis on them, okay? But even them, it's the same thing. You look for this level, the market reacts in this level. And for the guys that are beginners, we'll do another session tomorrow. Just guys, let me know what time of day are you guys comfortable in terms of doing the session. But obviously we can do it in between us sharing the signals analysis.